And today I don't have my laptop. I'm using the college laptop. So bear with me if I take time for opening something. Okay. Yeah. My screen is visible. Is my screen visible?
No, sir.
Still?
No, sir. Still not visible.
Acha. Now is it visible? Now it's visible, right?
No, sir. Still, it's not visible.
Eh?
Yes, sir, it is visible.
No, wait, because I can see in two places.
Yes, sir. It's visible now.
Okay. ठीक है. Last lecture we started with the second module. Okay, and we did the structure of commercial banks in India, scheduled banks, which are the banks which are called as scheduled banks, and there are another type of banks called as non-scheduled banks. Okay, so scheduled banks are the banks which are being mentioned in the second schedule of Banking Regulation Act of 1949. So basically, most of the private sector, public sector, foreign banks come under this scheduled bank, and only mostly for theoretical purpose, there are kind of banks which are non-scheduled banks. Okay. And we know what are the public sector banks, private sector, and foreign banks. Okay, and then we went with the function of public sector banks, the primary functions, accepting deposits, different kinds of deposits we went through, and giving loans and advances. Okay, and then secondary functions we did, which was investments of funds, other agency functions, miscellaneous function, helping the government, helping the people for investment activities, for mutual funds, for insurance, and many other things. Bank for even for locker facility, for paying of bills. So bank all helps in that as well, apart from accepting deposits and giving of loans. And next, we dealt with the type of deposits, time deposits. For a time deposits are the deposits which are the money has been deposited in that account for a particular period of time. Okay, so there are fixed deposits, recurring, and cash certificates. So they are the time liabilities of the bank. Deposits are the liabilities. So the time deposits are kind of time liabilities for the bank. And next for the demand deposits, we did demand deposits are the deposits which have been put in the bank by the customers, and they can um, they can ask for their money at any point of time on demand. So their money is available on demand, and bank needs to give them whenever they want to withdraw their money. So they are the demand deposits. Current deposits and savings deposits are the major types of it. Okay, that we did. So together they are called as DTL. Okay, demand and time liabilities of a bank. The deposits total as a whole, they are called as time and demand and time liabilities of a bank. Okay, next we did was the loans. Loans, uh, cash credit, loans and advances, overdraft and discounting of bills. Okay, we went through this. Additional money is being given to the companies, or the bills which are there with the seller. Okay, the bill can be produced in the bank and can immediately money can be withdrawn. So we did these things. Then next functions of public sector banks, we did this. Then role of commercial banks also, quite what do you say? Not the holistic view. It is the holistic view, but not the entire. What do you say? Entire roles can be mentioned, but these are the seven major roles which is being mentioned. Okay, you can write it on your own as well, but basically these 7 points are fairly available in 2 or 3 textbooks and on the internet as well. So you can use this 7 points. You can add your own points as well. Okay, role of commercial banks in socio-economic development. Hence, the commercial bank, how they are playing in the development of the society and development of the economy of the country. Okay, so which all things they are helping. So you can write as per you. Okay, so today's lecture I'll be starting. Today is a quite simple lecture. Okay, uh, the most important thing is today's lecture is the concept of universal banking. Okay, universal bank is just a second. Okay, universal bank is just a normal bank, a normal commercial bank, but in this commercial bank is available for everything, for all the financial transactions, for all in the entire finance industry, whatever the products are there, whatever the instruments, financial instruments are there, this is available in universal banking. It is kind of a diversification within the financial industry. Okay, so there will be one bank, one commercial bank. It can be a public sector bank, a private sector bank, or a foreign bank. So this bank will be there for commercial banking activities, like for accepting deposits, giving of loans, other miscellaneous functions, as agency functions, every other thing, which commercial bank does. Along with this, they will be also part in investment banking activities. Investment banking activities are like helping the businesses to raise money, helping the businesses to go for an IPO, helping the businesses to raise funds from the outside country, helping the FDI inflow or the FII inflow in the country. So all these investment banking activities also they will be doing, and also development banking. They will be also involved in mutual funds. They will be also involved in insurance. So each and every financial activity which you can think of, this universal bank will be carrying out. So it is kind of a diversification in the finance industry only they are doing. So this bank is called as a universal bank. Okay, suppose a bank, commercial bank, ICICI Bank is there. It is doing accepting deposits, giving of loans, a normal commercial activity. They will open up another bank under the same umbrella, under the same ICICI Bank company. They'll be opening another bank called as ICICI Investments or ICICI Investment Bank. They will open another ICICI Securities, okay, or ICICI Mutual Funds, or ICICI Prudential Life Insurance. So all these small companies which they are opening in the financial sector, they are creating a universal bank. So one customer is there who has a normal savings deposits in an ICICI bank. Now, as his savings is increasing, ICICI Bank can also pitch in to the customers for mutual fund or for any investments, or they can help customers in getting in touch with the ICICI Securities to open his demat and trading account. So they can do cross selling, which you might have heard in the marketing term. Okay, so that will build the CRM, and that customer will be, um, what do you say? He'll be very not. He'll not think about much of any risk or something, because he is loyal to the bank, and the bank, he has a good relationship with the bank. So bank will help in the various kinds of financial securities, various kinds of financial products for that customers. So that is the universal bank and advantages of it. So the first advantage will be a investor's trust. Okay, as the investor is opening up a maybe demat and trading account and is dealing in the securities using ICICI securities. So along with that, it can get involved into ICICI mutual funds, and if he is having a vehicle, or he is taking a life insurance, then he can approach for ICICI Prudential Life Insurance or general insurance. Okay, so it is building a trust. Okay, if they are having, and also the second one is economies of scale. Once you have a universal banking, you have all the products available in one umbrella, so you can have economies of scale. Okay. And then a resource utilization. The client's resource, the client is a resource in this case. So you can utilize client for all the financial transaction, all the financial products which is available with you, for mutual fund, for insurance, for any other investments. So you can use that. And then profitable diversification can also be done. Okay, day-to-day expenses can be split up. Many financial experts can be get in contact with you as a client. So as a client, there are many advantages if you are opening up, if you're getting tied up with a universal bank. And also from the banking point of view, there is a advantage. So they can do cross selling. A person who has opened up a demat account in ICICI Securities, a person of ICICI Insurance can also can get the data from ICICI Securities, and he can approach that customer to take insurance, or life insurance, or general insurance in ICICI. The data can be shared, and a cross selling can be done. So this is the advantage of a universal bank. Now, this advantages is definitely there. Okay, but once a customer has opened the account of savings bank, and he is not related to anything, only a savings bank account is there. So bank is getting that money, okay, through his savings deposits. Now bank needs to keep some SLR, CRR with the RBI, and the remaining money can be used by the bank. Now, generally in commercial banking, what bank will do with that money? They will give the loans to the to its customers, to the borrowers who will take a loan for home loan, car loan, or any other thing. So that is the flow of money in normal commercial banking. But what happens in universal banking? As everything is connected, that savings deposits, okay, that can also be used by the investment bank for the investment banking activity, for the insurance activity, or for any mutual funds. So everything, all the money gets mixed up. And if suppose all the money is getting mixed up, and suppose any one section or any one division of that bank collapses. Okay, suppose the mutual fund division collapses, or the securities, there is some fraud happening in the ICICI Securities, and the money is, there is a huge loss in that. So that will affect the ICICI Insurance, ICICI Mutual Funds, ICICI Bank as also, and that will affect all the customers who are not even related with the investment banking. They are only just have opened the savings bank account. So its advantages are huge, but there are also disadvantages are also very huge. So disadvantages might be different rules and regulations and effect of failure in banking system and monopoly. So different rules and regulations is for everything. For mutual funds, there are different rules. For insurance, there are different rules. There are, if you're giving a normal home loan, car loans, then there are different rules for that. So different rules and regulations are there, which is very difficult for the bank. and the effect of failure on the banking system, which is the second one. If, as bank is interconnected with uh, all its branches and all its counterparts like mutual funds and insurance. So if any one system fails, it will hamper all the entire entire universal bank. And also monopoly will be created if there are very few banks who are universal banks. They become so large that they will be too big to fail. Okay, so that is a disadvantage for them. Okay, so this is what the concept of universal bank is. So there are few universal banks in India. ICICI is one of them. Kotak is one of them. SBI is also one of them. So you will be having Kotak Mahindra's mutual funds. Kotak Securities will be there. A Kotak Mahindra Bank will be there. Kotak Life Insurance will be there. Kotak General Insurance will be there. Similarly with SBI. Okay, so this is the concept of universal bank. Okay, so any doubts in this? Okay, any doubt? Shall I move forward?
No doubt, so.
Okay. Okay. So I'll move forward. Some other concepts are there, like home banking. Okay. Yeah, a universal bank or a normal bank also provides home banking services. It's not very much, what do you say, prevalent nowadays, because it was home banking was available when there were no online banking that much was available, and home banking was generally used by the senior citizens who cannot go out to withdraw cash from the bank and they cannot stand in the line. So home banking was generally used by them. Okay. And it was not that much prevalent in India as well. But home banking is a service where you want to withdraw some money from the bank. You can call the bank, uh, give the details, and the bank person will come to your home to give the money, or you can, or to deposit the money as well. So that was done initially. So that was called as a home banking, and that home banking concept was then changed to internet banking as most of the homes started getting internet. So that same concept has been used by the internet banking. So there was a concept called home banking. Then ATMs, automated teller machine. Okay, you know much of them. What is there in that? But how ATMs were invented was generally as a marketer. Okay, now I'm talking about marketing, and generally as a marketing person or a salesperson, you are always in touch with customers. What is the need of the customers? What customers want? What different are the requirements changing as per the economy, as per the customer requirement? What is happening here, basically, so that we can serve the customer more properly, or as per the our competitors. So that is what the marketer or a sales guy will be thinking. What benefits will additional I will be providing to the customers. So, so this ATM came out. The idea of ATM came out something like this. The, there was a constant complaint of customers that they need to stand in the line to withdraw their money or to deposit their money. Okay, so this was the constant complaint, and also bank were also facing, what do you say? They, if they want to reduce the line, they need to increase the size of the bank, hire more people for just to give away the money. Okay, not much. What do you say? Not a, what do you not a work which involves too much of intellect, too much of brain. It's just a kind of a donkey work. Okay, just people are coming in, you're calculating money and giving them. Okay, so in order to reduce that cost, okay, so many people are standing in the line, so many people are giving away just the money. So in order to reduce that cost, some concepts were evolved by the Bank of England that, well, why not machine give away the money? Okay, we will put a check into the machine, and that check will have a certain code of the customer, and when the customer enters that code or insert that check, money should come out. Okay, it was that concept, and then as per that concept, ATM was invented. Okay, so now you know many things about ATM. Okay, 24/7 accessibility, easy transactions. There is very less queue, and banks many other facilities also are included in the ATM, for even for checking your balance, or editing your phone number, or even passbook entry is also there in many of the ATMs. Okay, and you can go to any branch and all those things. Okay, and also it is beneficial for bank, so no people will come to bank for withdraw money or to deposit money, or for even for passbook printing if it is available in ATM. And it's quite easy for both, for the customers as well as for banks. And next is about internet banking. Okay, internet banking, when I don't remember much, but internet was somewhat invented in early 90s by US military. Then they made it made available to the entire world. So World Wide Web came into existence, and then in the late 90s, Google came into existence. Then Facebook, Orkut, came into existence, and then you can just easily now go to Google and type whatever the automatically Google search engine generates the relevant field, and displays on your screen. Okay, initially you need to remember the exact website name. If you don't enter the exact website name, then it was very difficult to open the website. Okay, now Google has made it easy. So internet banking, as the internet was improving, internet banking also got involved into internet, and they made their websites. So website were made. It was very less cost, high transaction speed was there, improved efficiency, and many of the transactions which would involve a huge cash amount was pretty much considered safe, as cash will not be carried, um, and there will be a less of threat. So internet banking evolved, but there are security issues of that. Fraudulent websites are there, fake emails can be created. There can be a case that you are just typing in ICICI bank, okay, pressing enter. There can be a fake website which exactly looks like ICICI, like a first copy which you get in marketing, exactly same like the product. So exactly same kind of website you will see, but that is not of ICICI. Once you see over the link, there will be some modification in that website. So that is phishing, which is called in the software language. Phishing will be there, so that anything which you enter on that website will be directly recorded by the owner of that website, and he can use your login ID password. So that can be also done. So there is a risk in that internet banking. Okay. Then next is about Okay. Next is about mobile banking. Again, when a smartphone came into existence, mobile banking also grew. So they were same whatever the mobile bank. Acha, before smartphone, there was mobile banking in the terms of SMS, MMS, and mobile internet was very low. But as smartphone came into existence, mobile banking grew, and you can now pay your fees, pay your of valuation or anything, for form filling, anything. You can use mobile phone. You can order on Amazon, do online shopping, and online is, yeah, very much prevalent, and I don't need to explain you much in this. Okay, so internet banking, mobile banking uh, is done. Then next is about debit card and credit cards. Okay, again, debit card and credit card is is a card in which a black color strip will be there. If you have now, you can open it and check it. A debit or a credit card will be pretty much similar. There will be a chip. Okay, there will be a black strip on that, and there will be a number, a debit card or credit card number on the front, and below that, them mostly there will be your full name, whose card is it, and on the back side where the black strip is there, above that your signature space will be there, and a CVV number will be there. Okay. I'm not using this, so I cannot open it. Okay. This card is a direct link with the bank, and whether for withdrawal of money, for shopping, or for paying your money, everything, this can be used. Okay, the one difference between debit card and credit card is debit card, uh, the card will be linked to your account where you have deposited the money. Okay, it can be a current account or a savings account where you have deposited the money. So when you are using debit card, your money will be debited from the account directly. Okay, but in credit card, your money is not there in the account. It is a kind of a small loan which you are taking. Okay, when you are swiping credit card and using it for shopping or anything, then the amount will be it is kind of a loan. If you are shopping or 20,000 rupee, then that 20,000 loan you have taken from the bank, and after 1 month or whenever the cycle is, or then after 1 month you will be paying that amount to the bank. So it is a kind of overdraft or a credit which you're taking from bank. So that's the main difference between these two. And the classification, if I want to tell, okay, there are charge cards, smart cards, or member cards are there. Okay, charge cards are nothing but any receipt is there, usually a monthly basis or similar to credit card. Okay, then a smart card is smart card. We don't have. You must have not seen it. We don't have it here. Smart card is also a chip will be there in that smart card, and in smart card 2 to 3 different accounts will be there. Okay, suppose I have a credit card of maybe ICICI. Okay, or so both are here. SBI. I have a debit card of debit card of SBI. So when I'm using that debit card, my SBI account has been getting debited. Okay, I don't have any other choice. Okay, but in smart card, I'll be having one card for 2 to 3 banks. Okay, it can be a debit or a credit card, but one card, there will be details of 2 to 3 banks in that. So if I'm having 3 bank account, SBI, Kotak, and ICICI, so in only in one card, I'll put all those three details, and when I'm swiping it, according to the pin which I entered, and according to the what do you say, bank which I'm selecting, that bank account will be debited. Okay, in smart card. So one card will have 3 bank accounts into it, and once I'm using it, I can select the bank which I need to use money from, and I'll put that pin, and from that only it will be deducted. Okay, so this is what a smart card is there, and along with it, smart watches is also coming in. That means you just need to scan your watch, and the entire details will be there in the watch itself. Okay, it is not became commercial. It is not yet made commercial, but you just need to scan your watch, and the amount will be deducted from your bank. So smart watches is this chip has also been planning to get installed in smart watches. Okay, so this is what is about the few other concepts. Then electronic payment
So,
system is there. Yeah, tell me.
Sir Steven is waiting.
No, it is auto admit.
So he's not able to get into the class.
But I don't find him waiting also. Yeah, I guess he's in. Anyways, it is auto admit, so should be a problem. Okay. So next is electronic payment system. Well, electronic payment system, it will consist of the examples which I have given you. Okay, online reservation, online bill payment, online ordering, or online ticket booking. Okay, so electronic payment system में the financial transaction takes place between buyers and sellers online. Okay, if you are buying on OLX, if you are buying on uh, Amazon, if you are booking tickets on IRCTC or on Redbus, or if you are doing a bill payment on Google Pay, Paytm, Jio Money, Airtel Money. Okay, then if you're placing order online, Zomato, Food Panda, okay, or you're booking tickets, okay, on Book My Show in the Paytm as well. So these are the electronic platforms which they have provided. You don't have how the payment happens electronically, because it is too, what do you say, software related, how the process happens. But you have a process of NEFT, not of RTGS, but RTGS is also very similar. But NEFT process you have, so that we'll be discussing. But online shopping and online payment, the process you don't have in your syllabus, because it will be a two software related things. And one more thing is there in electronic payment system is e-cash and e-wallets. Okay, e-wallets, also Paytm wallet is one of the type of that. E-wallets is you are putting your money in Paytm account, and it will be there once, and you can use it. You can even withdraw that money and put it in the bank. Withdraw as in you can just transfer the money from Paytm wallet to your bank, or from your bank to Paytm wallet, and you can use when you're using Paytm for any transaction, that money will be deducted from your wallet. So it is just a kind of a wallet, but your money is there with Paytm. Okay, and many a times Paytm charges when you want to transfer that money from Paytm wallet to bank account. Okay, sometimes there will be a charges will be there also. Okay, similarly for phone pay, and for this Google Pay also, there is a wallet, you can put money into that and keep it. Yeah, but as per the RBI guidelines, you cannot put some, there is a limit for everything. Like for 10,000, 10,000 is a limit for, and 1 lakh is a limit for many of the transaction. And as per RBI, Google Pay is not recognized as the a correct payment system. Okay, so that's the general knowledge about it. Okay, next I'll come to check truncation. Okay, I'm talking about a normal check. Okay, wherein you will have a place, normal, what do you say, mm, a person's name can be written, and your signature will be there, and the amount can be written, amount in words will be written. A normal check. Okay, that is a physical check, which you write in a favor of anyone, or uh, cross it and use it for self. Okay, so that check also consists of MICR fields. Okay, below that you will have a fields or code which represents the banks. Okay, in next class I'll be using my laptop, so I'll be sharing you the photos of those things. I'll just go through this and I'll finish off the lecture. Okay, so how it happens, check truncation. What do you mean by truncation? Truncation is I'm converting this physical check into an electronic form, and electronic image will be created. Now, suppose you are bringing a check and you are paying your maybe fees in college through check. College will keep that check, and it needs to be kept safe, kept very safe, so that if that check gets stolen or it gets lost, then it is again you need to be informed that we have lost the checks, or again something. So it is not very much convenient to use that check. So once you give a check for your fees, that college will take that check, give it to bank. Now suppose the check truncation facility is not there, then the bank will just call the other bank on whose check is there. Then that check will be shipped over to that bank, and that bank will take that check, and it might go to head office. So too much of uh, what do you say, too much of wastage of time and wastage of resources is happening because of that transportation of that physical check. So what bank does is, when it gets check, okay, in any favor or anything, whatever it is, so they scan that check using that MICR fields, or through image processing, and they convert that check into electronic form. Now, once the check gets converted into electronic form, that physical check is being kept somewhere in the bank safe, and that electronic check is being used in the banking system. So they don't use the physical check. That is called as a check truncation, and we use image processing or MICR field for that check truncation. So now the paper check is being not used after this process. So definitely you can now tell about what are the benefits, what are the characteristics of a check truncation. It's just an electronic image. Only bank get involved in, and the clearinghouse can truncate the check. Okay, you as a customer cannot truncate the check. Only bank and the clearinghouse can get involved. Uh, and then the electronic image of check truncation will substitute the physical check, which anything I left out. Nothing. So these are the some of the characteristics. Okay, and then benefits you can write it on your own. Time, money will be saved. Clearing frauds will be less. Okay, it provides clearance of check is easy for them, and it is very much advantageous to banks and also advantageous to customers also. Okay, the customers will get easy clearance of the check, and bank don't have to fiddle with the checks of the physical check. They don't need to keep it safe and take the checks to different banks or different head offices. So reduction of transaction costs and reduction of manpower is also there. Then opportunities for vendors and point of truncation is also mentioned. Good. Okay. Yeah, MICR code and image processing are the two types of it. Okay, MICR code is a 9-digit code. Okay, wherein each digit stands for something. So using that code, the check can be truncated, or check can be truncated using image processing. A photo or a kind of a scan copy will be taken of both the sides of the check, and it will be used as an image. Okay. Then yeah, and that's it for today. Actually, next, yeah, ETF. Yeah, we'll go through next time any NEFT and RTGS process, IMPS process also. Then some terminologies, then future of banking. Okay, I need a very fresh mind of yours for NEFT. I'll not be doing it today. Okay, one new, just not a one difficult one, a new concept which we learned about was universal banking. So any doubts related to today's lecture are you regarding this? Universal banking, what is that? How it is useful? Or any other concepts? Electronic payment system, or about check truncation. Check truncation, again, I'll go through it next time along with the photos. I cannot share it because now I'm using now mobile phone. I need my laptop for that. Okay, apart from check truncation, any doubts in universal banking or any other concepts? Kindly tell me, or else I'll close the meeting today. Next class, maybe I'll be completing this module with a process of NEFT. So that's the only interesting thing left in this module, on the NEFT process. Okay, so after that, this banking part will be get completed from this subject, and we'll be doing with the sorry, we'll be doing with the financial services. Okay, about the mutual funds and about the leasing, hire purchase, and many interesting stuff. And for your Viva, for your CIE test, what is the internal test which we call, uh, first and second module will be there. Okay, shall I close the meeting?
Sir,
Yeah.
sir,
Yeah, tell me.
sir. Oh, that universal banking next class also, because I was not able to hear. It was very slow.
ठीक है. Anyways, I'll do next class the entire revision of this module. So I'll be
हाँ.
going through this.
ठीक है सर.
ठीक है, चलो फिर.
Bye
Okay,
bye.
see you. Have a nice day. Pay attention for Tanujavan's class. Okay, bye bye.